Hello and welcome to Total Tax Accountants. In this exciting video, we are going to talk about gifting property to your children, what are the taxations involved, and we will run through a few live examples for you to make an informed choice. Hopefully you will find this video useful. Should you have any questions, feel free to get in touch with one of our teams at Total Tax Accountants. So the first question that comes to your mind, can you gift a property to your children? The short answer is yes, you can. You can certainly consider gifting a property to your children. However, what are the implications? Gifting property to your children can attract one or other layers of taxation, such as capital gains tax, stamp duty, land tax, or IHT. Exposure to capital gains tax. Gifting property to a connected person is deemed disposal at the market value. Capital gains tax may be payable on the uplift value of the property. Subject to any relief, if there are no relief available, then the CGT may be high, especially if you've had the property for a longer period of time and there's been a significant gains in the property value. The second layer of taxation is the stamp duty land tax. Stamp duty land tax is payable on the consideration value of the transaction. If it's an absolutely gift, generally there is no stamp duty to pay. However, if you are also transferring a mortgage to the new acquirer of the property, and the mortgage debt is over and above the SDLT nil rate threshold, then stamp duty will be payable on the consideration, which will be equal to the mortgage debt is being transferred. The third is inheritance tax. For the purpose of the inheritance tax, such disposals or such gift are under potential exempt transfer, means should you survive longer than 7 years, then potentially there's no IHT to pay. The transfer may fall within the tax-free allowance for inheritance tax, which is a nil rate band or residential nil rate band. You may also qualify for tapered relief should you die within 7 years, and we will talk about this in further detail. So this is briefly introduction about the tapered relief. Following making the gift, should you die within 3 years, and assuming the property is exposed to full IHT, then it's 40% tax to pay. Should you die within 4 to 5 years, then the IHT will only be 24%. And if you live beyond 7 years, then there is no IHT to pay. So best to explain with an example, all three layers of taxation. So in this example, father owns a buy-to-let property and wishes to gift it to his only daughter. So first thing we need to explore whether is there any capital gains tax to pay. So we will look at the property value when acquired. So that was 200,000 in this example. Current market value is 216,000. And is there any outstanding mortgage? There is none. So the CGT, father qualifies for full tax-free allowance, CGT tax-free allowance for tax year 23-24. The capital gains tax after the allowance will be on 10,000, and father is a basic tax rate payer. So there is residential CGT rate, 18% is applicable. So you can see the CGT is payable in this example is £1,800. Since there is no mortgage and father is not getting paid for the property, as it's an absolute gift, so there is no SDLT to pay. There will not be any IHT to pay should father survive 7 years following making the gift. Example 2, which is slightly more complex. Parents who are both higher taxpayer own joint buy-to-let properties and they would like to gift it to their children. Properties value when acquired, 300,000. Current market value is 512,000, and outstanding. Here in this example, there's an outstanding mortgage. So we need to explore in this example, the first thing is capital gains tax, whether there's any capital gains tax to pay. So both parents do qualify for CGT tax-free allowance, which is CGT will then therefore be payable on 200,000, and both of them being a higher taxpayer, the capital gains tax on a residential at the higher rate will be 56,000. Now, will children have to pay SDLT? As there's a debt being transferred to children, therefore children will have to pay SDLT on the consideration value of this transaction. Now, you must be wondering, what's the point of doing all of this exercise where there's a huge capital gains tax to pay and potential SDLT is payable on these transactions? However, should parent decide not to do anything and leave it at the mercy for HMRC to come and tax them when they pass away at 40%, if you look at the overview, what would the IHT be payable otherwise? And then the IHT calculation will look like it. Property value minus any debt, and this is the chargeable IHT gain, assuming that all allowances is used against other assets, and this property is exposed to 40% tax of IHT, then the IHT would otherwise be payable 124,800. So you can see it's clearly double than what the CGT will be payable, or potential stamp duty, including stamp duty, payable, than what IHT will otherwise be payable. Example 3, parents who are both higher taxpayers wishes to gift their only main residence to children. This is very important. Here, parents only owns one main residence and they would like to gift it to their children. So first thing we explore whether there is any CGT to pay. Property value when acquired is 300,000. Current market value is 650,000, and there is no outstanding mortgage. To your surprise, there would not be any capital gains tax to pay because the property, as you can see, had been their main residence all this time. So parents should qualify for full PPR relief. So there is no CGT to pay. Since there is no consideration for this transaction, hence there is no SDLT to pay either if it's an absolutely gift. No IHT to pay if parents live above 7 years or the whole of that property falls within the IHT nil red band. As you can see, both parents will have 325,000 each, so that's 650,000. So there is no SDLT to pay, there is no IHT to pay, neither there is any capital gains tax to pay. However, the most important question, you might be wondering, this is a very attractive deal where you are able to give this property away with no upfront cost attached to this kind of transactions. The most factor you cannot ignore in such number of transactions where you are actually gifting your main residence is GWR, which is gift with reservation. The first and foremost question to ask yourself, where are the parents going to live following making the gift? If they are going to receive pleasure from the property, or they're going to live in the same property after making the gift for up to their lifetime, then this might get caught out under GWR, which means for the purpose of IHT, HMRC will deem that the gift has never been made and it wasn't a genuine gift. So you must watch out for the GWR. So in short summary, we will summarize this video. So whenever you are thinking about making a gift to your children, then you've got to acknowledge the fact that there might be direct or indirect taxation involved, such as capital gains tax. Is there any SDLT to pay, or will there be any IHT to pay? So whenever you have any sort of a properties which you like to give to your children, then it's best to explore what are the upfront costs attached to it, or what are the implications of taxations. I hope you find this video useful. Should you have any questions, feel free to give us a call on our confidential line, which is 01494 264826. Feel free to drop us an email on info@totaltaxaccountants.co.uk. Many thanks.